Well, happy Monday, everybody. Welcome back for another YouTube video, all in crypto here, and this is going to be your daily cryptocurrency market update. And what direction are we looking to take this week? Well, we're going to hopefully lay that all out for you. I really just want to start with a broad macro because since the start of February, we've had this readjusting in regards to implied rates and where markets are now pricing the Fed getting to. And sort of topping out. And there's been lots of interest in people saying that we're actually looking at a 6% Fed funds rate as a possibility. I'm not convinced. What we have really seen since the start of February, though, is this 50 basis point narrative really come to the focus for the next meeting, which will be on the 22nd of March. So you've got a while. You'll have lots of inflationary data that's going to come out before then. You can also watch the basket of things that make up the CPI for maybe a little bit of insight. But essentially, markets are stalling. And for Bitcoin, it's not a bad thing, actually. The structure that Bitcoin's forming is healthy, providing it doesn't get invalidated. And we can talk about all that. We'll look at the week ahead in terms of what the dollar's maybe setting up to do. The stock market, really the 2-year yields is something we're very keen to look at. I'm also going to be looking at a tweet from Lynn Alden, Jim Benanco, and Lawrence Summers. So really, you've had this adjusting of markets and where they think rates are going. And they're, of course, adjusting in terms of, potentially selling off in the fears that we're going to have tighter for longer. Now, the 50 basis point, you can see there's a 27% chance of a 50 basis point. This one over here, guys, you can read it all down here. And there's a 73% chance of a 25. Now, I believe they'll do 25, and I believe the reason that they're going to do 25 is because the Fed is between a rock and a hard place right now. They have to deal with inflation that, ultimately is very destructive across the board. But they also have this colossal debt monster that they need to keep fed. And by them continuing to up rates at, getting to 5%, which is where we'll get to on the next rate hike, we're at 4.75 now. It's a scary thought, really, for the Fed. We've already seen, and some people call it a soft pivot, with Janet Yellen calling to up the debt ceiling, which is not really a debt ceiling. It's never been a ceiling. It's more always being like a rooftop bar filled with, free bar filled with all the narcotics you could possibly dream of. So this is really what's going on right now. And I have to be totally honest with you guys. It's a very hard environment to read. Now, we took positions back in the market at the start of the month, and we're still in them. And we ultimately do expect that continuation. And really, we're just trying to figure out where this right shoulder's going. The right shoulder's completion's largely going to depend on the dollar softening up and the 2-year yields. But there is definitely the scope for this climbing. Certainly if we get, or those two climbing, certainly if we get higher inflation with the CPIs. This week, you've got lots of PMIs, lots of sort of news coming out of China. Nothing, it's kind of lackluster. Couple of payroll numbers in there for the US. But nothing major in terms of inflationary data, other than I think actually the Euro CPI. I think that's Thursday. So this is what we're looking at. You can see people are now starting to bet on 6%. And we've seen a reallocation, and markets, of course, have sold off in accordance to this. And Bitcoin's sort of tired out. And it's tired out at a perfect point, really, this 25K neckline or potential neckline that we're looking to ride to the downside and then see that continuation up out of it. So it's going to be interesting. We've already sort of laid all the levels out. We've hit first target. Just get your fib retracement tool. Your 0786 we've hit. Next one is 0618, and then your 5, and then we don't want to go past the 0382. So this is what we're looking at, and this is the play for me. And talking and staying on the sort of macro topic, this was a good tweet from Lynn Alden. Last week we had the PCE. Again, it showed stickier inflation. Markets adjusted for this, sold off because they thought that the Fed, this is going to obviously, kind of put the nail in the coffin for the Fed having to be harsher for longer. PCE price index came out today and showed acceleration on month over month and year over year basis in regards to inflation. But if you look at it more broadly, You know, it has come down, but you are starting to see it sort of somewhat rear its head. She talks about the kind of situation the Fed are in, and this is the interesting thing. This is why I think they'll go timidly from now on, even though they're going to talk a very tough game because of the amount of debt behind them. So the Fed has a dilemma, almost a race between two things. As they raise rates, raising rates generally results in tighter borrowing standards on a lag. This can reduce lending-driven money creation and lead to disinflationary demand destruction around the margins. So this is kind of what we're looking for. And then 2, at high public debt levels, raising rates also increases federal interest expenses, which increases the fiscal deficit, which is a source of ongoing inflationary stimulus into the economy. So with them, this is why I say it's a kind of a soft pivot that Janet's looked to do. Because if they raise the debt ceilings, there's only one, and it's a rooftop bar. It's a party, basically, up there. Then essentially, it's almost a form of stimulus because they're increasing the debt that they're taking on, and that goes into the economy in the form of money and payments being made. So this is what I mean. They're kind of double screwing themselves here. And the fiat systems, by the way, in our lifetime, we will see them come to an end. And what I mean by the fiat systems is a debt-based system. Because at the point we're already at, it doesn't make sense. You're never going to pay the debt off. Money is backed by debt. It's an IOU, essentially. So what's the value of debt that can never be paid? Okay, so it will come to an end in our lifetimes. This is why it's so magical that Bitcoin and crypto came about when it did. But the Fed are kind of backed into a corner. She then goes on to say, in the 1940s, inflation was fiscally driven and public debt was high. In the 1970s, inflation was mostly lending driven and public debt was low. Currently, the Fed is using a 1970s style playbook to deal with the 1940s fiscal driven inflation. Yeah, it's just fiscal. If you look at everything against the M2 or M1, you'll see where inflation really came from. You know, supply chains undoubtedly have had an issue, but broadly it's been a fiscal error. And this is the interesting thing about where we're now moving into. And you know, with markets readjusting, one thing you'll know about the markets is you wouldn't like to date them. They're very emotional, right? They overreact to everything. And ultimately, this is the real one that we're watching. You know, what are we going to get? Are we going to get that 50? I think we're going to get that 25. I think markets will rally off of it. This is maybe potentially how Bitcoin forms its shoulder. Maybe you get the dollar that's not looking too badly this week. It did okay last week. But you're running into resistance, which maybe actually I'd probably be a little bit safer and put it there. So maybe it has a little trip up and then comes down. And of course, Bitcoin will do that and that on the back end of that. And then you're also looking, for me, the big one's 2-year yields, which is going higher. This is basically a way you can look at implying rates. Started rallying on February. Everything started dumping on February in opposition to it, with higher inflationary data coming in. So this is the game of chess, or chess, that we're now playing. Is, you know, have we got where we think markets need to be right to start reinvesting again? Or is there still some adjustment that needs to take place? And you guys are all going to have your own opinions on it. And I have mine, and I've taken my positions accordingly. This is the beautiful game of investing and actually trading, is we're trying to guess where we think the markets are going based on probable outcomes. And I think right now, until proven otherwise, looks like we're set for continuation. That's just my thoughts. I'm not saying we're in a bull market or anything of the sort, so I'm not one of these guys. I'm a real technical analyzer that understands this stuff, and I wouldn't make such an outlandish call to say that we're in a bull market. We have to prove that. You know, we're still coming potentially out of this bear market or this downtrend, and we have a number of things that essentially lead us to believe that that is in play. And this, if this forms, is going to be a beautiful reversal structure to sort of couple in with all the other sort of reversal indicators we've been given. So where this goes to, I don't know. Your invalidation's really running the left shoulder. Invalidates the entire pattern. And then, of course, I wouldn't want to see you go past your 0.382 because that suggests that you're going to essentially retrace the entire move. I was going to go into a tweet from Jim Benanco. I'll leave a link to it in the description, talking about what we've seen take place, talking about how ARK's had a great year. This is just an interesting one that I'll read quickly. We've got an extremely difficult economy to read. There are a variety of leading indicators that are troubling. Inventories look to be building up relative to sales. Okay. Firms are reporting concerns about their order books. The business sector has a lot of people on hand relative to the levels of output they're producing. Yep. Consumer savings are being depleted with low savings rates. So this was a good interview. I watched it. And of course, read through the manuscripts. So we'll see what happens, guys. Really, this week, looking from an outsider point, futures market isn't doing too badly. It's green right now. Gold is down. The dollar is down slightly. Dollar does stand a good chance of reasserting. We did say that it's likely you're going to get a dollar reassertion. Down here, looking at this double bottom, technical analyst, looking for that upside. You've ran this, maybe you get something like that, and we continue to see that upside. So it is quite likely that the dollar is likely going to continue to, reassert, at least make it past here. But whether this tops out, these are all things we're looking at to sort of position ourselves in the cryptocurrency market. So that's all I've got for you guys. Happy Monday. I didn't want to be too depressing, too doom and gloom. We're very optimistic on the outlook for the cryptocurrency market. We had rumors from the G20 that they are now going to regulate the space and give a broad global regulation. And regulation, even though some people seem to really disagree with me on this, is what's going to propel this space to the big leagues, whether you like it or not. All I've got for you in this video, guys. You enjoyed the content, like, always appreciate it. So as a comment, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.